This week on the podcast, if you look at your numbers every month and have that feeling deep in your gut that you just don't trust them, this is what great monthly reporting looks like. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host Claire Hancock is a finance director, chartered accountant and entrepreneur. And every week I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. This is definitely not the second time we're recording this podcast, is it, Claire?
No, it's actually the third time because...
What?
We literally recorded the entire podcast. Simon recorded over it, so we didn't have it. And then we just started recording and the fire alarm went off. So here we are.
It is technically the third time.
For the third time.
It has been 104 episodes since I last made that mistake.
And we're on 123, so not bad, not bad.
Look, I could have done this many times before, but it's not bad. It's taken me...
That's 2 years worth of
It's
podcasts.
taken me 104 episodes. Last time it was that it hadn't recorded right. This time I just recorded over.
204 episodes is exactly 2 years ago.
104.
104, sorry.
Yeah,
it's exactly 2 years ago. Isn't that a bit spooky? It's something about this week. You're not post-bank holiday, you're just not with it.
It's not on. Maybe I've been dealing with Sadmin.
Well,
do you know what,
Claire? Hang on a minute. I'm actually sort of reading a little bit from the fact that we have to record this podcast again because the news story of the week,
you just
are
leave it out?
Absolutely buzzing over. But I honestly just think that this news story is just so ridiculously dull.
No, I love it.
And I've got to sit through it again. Here we go.
At least you're not doing Sadmin. What's Sadmin?
Sadmin is the official term for dealing with the admin of dead people.
I don't think it's the official term. It's a term that's been coined by the media for dealing with the admin of dead people. I think it's just a tongue-in-cheek. I don't think if you go in a dictionary, it's like, look up Sadmin, it's like official or anything.
What's the Urban Dictionary? I bet it's in the Urban Dictionary.
Leave it out. All right, let's do this week's amazing news story of the week. So, this week, really good news story, I think. The headline was, are supermarkets really ripping us off for a pint of milk? And this is on the back of the fact that a study by the Institute of Economic Affairs has found out that most of us believe that supermarkets' profits on a pint of milk are about 50%. What do you think the profits are on a pint of milk?
Pennies.
So why are you not most people? Well, and this is a stupid question because you like see everyone's account. So, of course, a better question. Let me rephrase this. Why do you think most people think the profit on a pint of milk is 50%?
Because it stayed so cheap for so long. Like it is just...
Hang on. How does that wire in someone's brain that somebody's making 50% margin? Surely if the price had gone up a lot, they think their margin's gone up. Right?
Because the general public, I believe, my interpretation, I've got no facts other than just my own thoughts and feelings to back this up at all. But I look at things and if prices keep consistently going up, then I look at that and I think that's probably an industry that's quite squeezed. And as soon as they get a price increase, they have to pass it on to their customers. But if people are not putting prices up, I would say that generally I look at that and I think that's normally a sign that, I mean, it's not always a black and white rule, but it's a sign that then it's not a squeezed industry because they don't need to keep putting prices up. They're making plenty.
Okay.
I'd say that's the interpretation of it. The reality is very, very different. And that actually milk is a massive, like essentially a loss leader for the supermarkets, isn't it? That they sell it because it attracts customers into the store.
Well, you are dead right about one thing that you said, and that's the almost wild stability of the price of milk. So basically, up until about 2022, the price of 2 pints of milk, we're talking about 2 pints of milk here, Claire, was basically just like stable for about 8 years, like literally to the penny. And weirdly enough, since 2003, the price of a pint of milk has been weirdly steady at about £1.30 for about the last 4 years. But something happened between 2022 and sort of the end of 2023 where milk just went up in price. But how much do you think milk went up by during that time?
30%?
What is really upsetting about this is we've done this podcast once before and you can't remember what the percentage was. It's 56%,
okay,
right?
I'm
milk's gone
thinking
up.
that almost the entirety of the price increase on milk is going to be the cost of fertiliser, the cost of fuel and the cost of logistics. And roughly that went up around 50% due to the Russia war. So that's how I'm looking at that, thinking
so why
that's
did you get to 30% and not the 56 that it
because
actually
it's
is?
not,
You'd have been right if you'd have said 50%.
Because I don't think 100% of the cost is linked to those things. Like some of it is buying a cow, and I don't really know what's happened with cow prices, for example. So,
okay, look, so the reality is that actually milk went up 70% and then dropped back down to stabilise at 57%, 56, 57%, above where it was in 2022. And it stayed there ever since for the last 4 years. Really, really, really stable at about £1.30. So there's absolutely no doubt that milk's gone up. And this is on the back of the headlines we had this week about Rachel Reeves wanting to look at kind of capping these basic essentials, didn't she? And the Bank of England governor came out and said this is, it'd be an absolute joke. It's ridiculous. You can't go asking supermarkets to cap the price that they sell things for. That's not how the world works, and various other things. And actually, the whole of this story is kind of putting context to how ridiculous what she was asking is through the lens of a couple of pints of milk. So actually, what do you think the actual profit, out of that £1.30, what do you think the actual profit amount is that is made?
Pennies.
How many pennies? Again, second time we've done this. You answered badly last time.
About 8p.
Closer than last time. I think last time you said like 3p. It's 10 pence. So it's about 7% the profit on 2 pints of milk, that is. So way off what the general public think they make 50% off. So, and also that profit just hasn't gone up much. Most of the increase in the milk has come from labour costs in that time. So at 14, it's gone up 14 pence now at 35 pence, and overheads, production, farming, distribution, the things you'd expect, really.
Now, what our viewers missed, because we've accidentally deleted the first enthralling podcast on milk prices.
To know how people are viewing an audio podcast, but okay.
What's the price of 2 pints? £1.30.
£1.30.
Right. The price of 2 pints is only £1.64. So that gives you an idea of the actual cost of the milk. Sorry. Yeah. So it's a 35p increase to double the quantity of milk.
Okay.
It gives you an idea on how much of it is milk versus distribution costs.
Yeah. Yeah.
Staggering, isn't it?
Yeah, it is. It's insane.
Why are we talking about milk so much, Simon? Because on the bank holiday weekend, we were babysitting my nephew, weren't we, for a few hours, and we took him to the milk vending machine, Clipstone Dairy, down the road from us, and you can go and get fresh milk out of the vending machine there. So you just take your bottle, stick it under the little spout, and out comes fresh milk.
And the conversation was how much more it costs to go direct to the farm than it did to the supermarket, because how much did you pay for 2 pints?
It was either £1.50 or £1.80.
And it's £1.30 in the supermarkets.
Yeah.
So the irony is, if you cut out all the supply chain, the supermarket profits and everything else, it's more expensive to buy it directly from the farm.
And you didn't think it tasted any different?
Not really, no.
I thought it did taste a bit different. Yeah. It was a bit creamier and it was very different in colour.
Doesn't make any sense, the price points there, does it? But interesting.
No, it's not interesting, Simon. Stop saying that.
It is interesting.
It's the second time.
Do you know what is interesting? This is wild, right? The whole point in the whole of this is that old Rachel Reeves is just spending her time focusing on the wrong things. They described at the bottom of the article that just in general, our food prices in the UK are frankly a modern miracle. And this is the stat that blew me away, that I don't think anyone's talking about. And this is data from the ONS. So this is Rachel's own data, because they own that organisation. In 2001, the typical household spend for a weekly shop was £80.90. In 2024, what do you think the ONS's stats were?
Well, I know the answer to this. It's slightly lower at £79.50.
Finally, you remember something from recording it once. Yeah, staggering. It's gone down in 24 years. So the average household weekly shop is now £70.50 because of the productivity change in our supply chains, our food chains and everything else. So is she just focusing on the wrong things?
Well, look, she's always focusing on the wrong things. However, what I would like to know, 2 things. Maybe 3 things. And this is the numbers person in me. It says you can never take 2 numbers that happen to be tagged the same and assume that they are of the same basis and making. So, number 1, is it taking into account that actually families have changed? Like people have less children and they're more likely to only have one parent households as well. So what are they saying
because
as a family?
It's household spend. So no, it's not taking that into account. Correct. So that could be one.
So households are shrunk.
I have that. I mean, again, another. Who knows?
Well, statistically, we know people are definitely having less kids, so that's in it. The other thing is that the volume of takeaway consumption is just off the charts, isn't it? It's quite normal for households to get takeaway several times a week. And even if they don't think they're getting a takeaway, just going and eating out and things like that. And is that taken into account in it as well? That, you know, if you're actually only eating at home 3 or 4 days a week, then of course
that is interesting, because we know that there's been an explosion in like the delivery apps and various other things. But so I've asked it, let's see. ONS do this data actually, the average household size in England. So their own data captures this in as well. So in the year 2001, the average household size in England and Wales was about 2.4 people. The average size, the last time they did this in 2021, so 20 years later, is 2.4, the exact same. So that number is completely identical. So
I'm going to say something
wildy. It must be the delivery thing.
Must be delivery.
Or guess what? Maybe our supply chains have just got so much more productive and everything's got cheaper.
Look, Simon, I'm really struggling to keep this conversation about milk going much longer.
Right, let's move on then. Because we promised you this last week. We forgot we promised you it, but we're bringing it this week. And this is the magic monthly report that you need to make sure you become a time traveler, not an archaeologist. So last week, Claire, we did a lot about why you shouldn't be using annual accounts.
We did.
To make decisions about your business and what you should be using. So today you're going to tell people exactly what they should be using and what that should look like, aren't you?
Yes, I'm going to talk people through what we provide for our clients on a monthly basis. And I will start by just framing this saying we have two different forms of reporting that we provide to our clients. The first is monthly reporting, and that's what we're going to cover today. And when we're looking at monthly reporting, we're trying to ask, is the business on track? What's working, what isn't working? And the main focus of what we're doing on a monthly basis when we look at those numbers is saying, what actions can we take that moves the dial in the next 30 days? So we're not looking for like these big strategic gains and losses and things like that. We're looking for these small wins that can be implemented in the next 30 days. So something like, this customer's a particularly bad payer, we need to do something about that. Or
I look at this as tactics versus strategy. So
yes, 100%.
monthly meetings are all about tactics.
Focusing
quarterly meetings are all about strategy. Or another way to put it would be battle planning versus war planning. So you battle plan on a monthly basis, you war plan on a quarterly basis.
Absolutely. So monthly profit and cash, quarterly growth. That's how we split it. So I'll go over what we put in our monthly management accounts pack, a monthly reporting pack for our clients, and you'll see. Probably what was I about to say? My train of thought has just completely gone out of my head, Simon.
I don't know. Without reading your mind, I couldn't possibly say.
No, I don't know. I feel like it's descended into a bit of chaos this Friday afternoon. I feel like it's Groundhog Day.
Crack straight
right,
on
let's go with it.
The exec summary.
So
this is the most important thing because the executive summary, like if I had £1 for every time I overheard you or your clients say to you that they get a little bit number struck, they still can't see the wood for the trees, and various other things with their numbers. And sometimes when you do this, they say that, oh my goodness, this is the first time that I've truly seen this number. But yet they've been given the number for years in a different format by different accounts or various other things. And this is the most important thing, is that when you're delivering numbers to a business owner, most business owners, dare I say, this is not in their wheelhouse. This is not what they're good at. I'm certainly not good at this. I'm not a detail person. I don't really get involved in that type of thing. You know, I'm a salesy, growthy. I'm good at doing that kind of thing. But actually, I need somebody to spell it out to me and to really highlight it in a way that I can understand. And this is what you do first by understanding your clients, isn't it? By making sure you understand how they absorb information, how they learn, how they read, and then being able to create an exec summary that actually is valuable to them. So tell me a bit more about what that kind of looks like, because I think it's probably the most important bit about this reporting.
Yeah, look, I think when clients come to us, and you know, even clients that don't come to us, people I just talk to and do discovery calls and things like that, they probably sit in one of three camps. They're either just getting annual accounts, or they're getting what I would call very basic accounts that are just simply like printed off of Xero or Sage or QuickBooks, something like that. And they tend to be just sort of the out of the box thing. You literally just click the button that says print my P&L and it does it, kind of thing. Or they are getting what looks like a very professional report from a system like Sift or Fathom, Data Rails, something like that, more of these like CFO reporting tools. And these reports can look really fancy. They've got loads of graphs, they've got loads of colours, everything looks really great, but it's just cookie cutter. Somebody has literally sat there and run the management report on Sift and sent it to you. It doesn't really, it's not refined to your business. It could be going to a service business, it could be going to a HGV business, it could be going to an events business, it could be going to a dog walking business. Like, it's just so generic and not specific to your business. And that's how people just get overwhelmed by numbers and feel that they need to resort to looking at the data to find out what's really going on.
As a business owner, I think there is a very simple way to understand whether the reporting you're getting and doing on your business is any good. And it's very simply, was I able to make decisions on the back of that? How many decisions did I make on the back of that? Or, how much insight did I take on the back of that was executionable, actionable in my business, that actually changed something? Or did I get a report, look at it, carry on, get a report next month, look at it, carry on? Like, am I just part of a cycle where this thing's dropping and ticking a box? Because honestly, you might as well not even get the report, because what's the point? Like, what's the point in the report unless it's generating something out the back of it? So therefore, it's great getting reams and reams of data. And this is as a non-accountant, this is like what I see all the time in like CFOs and things like this. They don't get their customer. And this is their fundamental failing, is they can't put themselves into the shoes of the customer. So they think, because they like to, most of them like to think they're super smart, they just put more graphs in, more numbers, more, and think that's the answer. And there's a reason why Wonderwall is one of the best songs out there, isn't there?
Oh, I don't know.
Because a kid could play it on an acoustic guitar, because it's like Mozart.
Yeah. I mean, that was quite a good analogy there. So, bringing it back.
Bring it back. Right, while we're in music, go on.
We try and we have a starting point. So we have the same 5 sections on our reporting portal. We've actually built our reporting portal in-house because we've been through all those processes that probably other FDs and things like that have been through, where you start out with some of these tools like Sift, like Fathom, but you realise that for £1 million plus business, they're really static. Like, for example, if you want to view sales, you can only view it in one way. So it's like, well, hang on a minute, what happens if we want to exclude this or add this or compare it to that? And those options just are not in there. So therefore, we resorted to using Excel, but we were finding it quite cumbersome to build and maintain these Excel spreadsheets. And they just don't look good. They're not visually pleasing to the eye, and they're difficult
for people to see the wood for the trees.
Yeah. And we don't want to be that company that's just sending out massive Excel spreadsheets to people saying, oh, there's a report here and a report there. So I built our reporting portal in-house. So it's completely bespoke. Every customer has the same format, but the information that's displayed to them is completely different. So as an example, every customer has a KPI section, but not one customer has the same KPIs.
Their KPIs. We've talked all the time about choosing the KPIs for your business, and every business has a different suite of KPIs. There's probably like 50 to 100 KPIs you could track across all businesses, but you should only be tracking 5 to 8 of them. Now, choosing those 5 to 8 is key, and we've done lots of podcast episodes about how you do that, but then making sure they're in that report and the others are not is key as well. And this is where this type of reporting works for multi-million pound businesses.
You've got to know how businesses tick as well. So when clients come aboard with us, it's me that's building their report for them, like as the FD. I'm not handing this down to a junior member of the team to just plug it into the blanket tool that we use. So I record everything. I record the discovery call I do with them. I record every follow-up call. I record all the onboarding stuff that we have with them when we talk about the future, where they're going in 3 to 5 years, what opportunities are there, what risks are there, when do they see themselves exiting the business, all of that information, as well as the operational, how do you do your bookkeeping, how do you process sales invoices, all of that stuff as well. We record everything, and we then put all of the transcripts into AI, and it produces a 100-point document on our customer to tell us what it's suggesting we should be putting in the reporting portal for them. Everything down to what KPIs we should be putting in there, to whether this is somebody that likes visual graphs, do they like detailed tables, do they like to see a lot of numbers, do they like to keep things succinct, what is their level of financial understanding likely to be. all of that stuff, literally 100-point thing. And it will produce like a list of, we suggest that you have this, this and this. But then I will then sit there and say, no, that's not right. My 20 years of experience tells me that this client does not need to be looking at that number.
So by the time their reporting pack is designed and ready, it feels like a hand-in-glove situation, doesn't it? They feel like it fits them really well, like a tailored suit. And I think that is kind of the key here, isn't it?
Yeah. And so that's what you've got to remember. Like, I look back now, I can actually distinctly remember this when I started one of my jobs, and they didn't really have any management accounts in place at all. And it was my very first job. I'd been at the business like 2 weeks and I built a management accounts pack. And it was my first management accounting job. But I look back now and I'm like, I literally just built like the standard P&L that everybody had because I didn't know the business. I was new, so I didn't know anybody. So I wasn't really going out talking to people in the business. I didn't know what made it tick. And I absolutely produced something that probably looked really bloody fancy. And
not that useful, probably.
But probably not that useful for that business because I didn't know the business well enough. And so that's really, really crucial. That
and I was going to question like why you do this, but I think this is really interesting because it's actually really leveraged work for you, because actually you do this really bespoke piece of work once and then it's used forever with annual tweaks to KPIs and things like that move as the business moves. But ultimately, by setting this right in the first place, it allows your team to absolutely deliver on this month in, month out. And that's pretty highly leveraged work for you to do, to deliver that for them.
Yeah. And, long term, I don't want to be the one doing that. That's the reality. But for now, where we are, it's a new reporting portal that we've got. It's a new process. And I actually really enjoy doing this stuff. So it's why I stick with it. It's absolutely my wheelhouse. It's my sweet spot. So, right. So what's in the report? That's what people are here for. So we always start with an executive summary. And we describe this as, if you've only got 5 minutes, just have a look at this one pager. And it's also what we talk to our clients about in the meeting. So it kind of forms the agenda of our monthly meeting that we have with the client. We always share the reporting pack in advance, so they've got plenty of time to look through the detail if they want to, bring questions to the meeting. Otherwise, all of the answers that we need should be in the exec summary. That contains a snapshot of some key financials. So we have just really high level numbers like sales, GP, profit, O to customers, O from suppliers, just high level. Literally, there's like 7 or 8 numbers there.
Yeah.
And then we also have that in a graph for the last 24 months. And that is absolutely critical for spotting trends. If you just focus on numbers, you can be like, oh, I've got a £5 million business, I'm going great. No, actually, your OPEX has been trending way up, out of kilter with your sales for years now. We've got to do something about this. If you don't put that visual on the same screen as each other, you just won't spot things like that.
Okay. And how does this change if I'm like multi-entity, or I've got more than one business, or do you just do it from a consolidated perspective?
We completely tailor it. So some businesses will want to see consolidated. Some have got like one main business and that's what they want to focus on. So it really just depends on the goal of the client and how they're running their business. So we have a snapshot of the financials, both some numbers and then also the graphs so that we can look at the trends over the last 24 months. We have the KPIs, and this is really where most of our conversations are going to be focused with our customers. It's going to be on these KPIs. So we have somewhere between 3 to 5 cash KPIs and 3 to 5 profit KPIs. They're going to be things like revenue or gross profit per employee. Quite a common one that we're starting to look at a bit more is in terms of if you've got multiple revenue streams. So like for me, for example, our core package, our financial controller package, how much of my revenue comes from that versus other multiple streams. So like due diligence work, annual accounts, all of that type of stuff. And then, for example, some cash flow KPIs would be looking at like debtor days, creditor days, cash versus equity, all of those types of things, completely bespoke for each customer.
And this goes back to what you said right at the beginning, is the fact that why the monthly meeting is different to the quarterly meeting. A good way of putting that is the monthly meeting's about profit and cash, and the quarterly meeting's about growth.
Yes.
And that's how you look at it.
Yeah. So the final thing on the exec summary is the cash flow. And again, it's just a really straightforward graph that shows you money in, money out on your bank balance for the next 13 weeks prediction. So that tells you, do I need to go to the cash flow slide and have a look specifically about that? If everything's green and everything's on track, don't bother going there.
Good.
So they're the 3 things that go on the exec summary: the financial snapshot, the KPIs, and the cash flow. And that's it.
And it's also about efficiency of the business owner's time, isn't it? Because in an ideal world, once you get these businesses, to really where they need to be, 9 out of 10 of these meetings should be a quick look at the exec summary. I'm happy where I am. I'm not spending any more time on it. I'm going growing my business. And that's the beauty of it. I know everything's in where it needs to be. This is like what I used to say, like the most impactful reporting that I've ever had across lots of different things is what I would always call exception reporting. This is about like, I don't need to know anything but the exception. And I think that's what the exec summary allows you to see quickly, isn't it?
So one of the things that I built into the portal was this like commentary flagging system that we've got. So we can add comments anywhere in the portal that a business owner can see. So if there's variances on the P&L on the balance sheet, we can go in and explain to you why. That's also absolutely critical part of what my team are doing on a monthly basis. I've always said, if you cannot explain that number to me, it's wrong. That is my assumption. If you can't tell me why that number is like that, I'm assuming it's wrong, so fix it. Because either the underlying data is wrong, i.e. something isn't posted, something's been missed, something's been duplicated, or there's something going on in the business that's caused this, to explain it to me.
Yeah.
And so they go through the system, they add comments, they explain things. So if a number looks unusual, if it's bigger, if it's smaller, there should be a comment there. But they've got the ability to flag it. And if they flag it, when our customers log into the portal for the month to see their report, they get the flagged comment surfaced to them. So we say to them, if you only have 5 minutes, absolutely look at the flagged comments and then look at the exec summary and your job is done. Otherwise, everything else is what we would call business as usual. You don't need to focus on it.
Great.
So
I think we've done exec summary to death, but
yes,
it is the most important part of the report.
I'll quickly rattle through the
there's
others.
Lots more to the report, but this is, again, the sentiment is this is about where you drill down only if you need to. But
yes.
So what does the rest of the report look like?
So we then have got obviously the P&L, and the P&L, will be broken down in as many ways as is relevant to the client. So if you're multi-entity, you have a P&L per entity. If you use tracking categories, like for different sites or locations, things like that, you'll have that in there as well. But essentially, you get a snapshot. So your key P&L numbers, sales, GP, OPEX, profit. Then you have your detail, your actual P&L, and you can drill down right to nominal code level if you want to see that detail. And it's important that you've got some history in there as well. So at least the prior 6 months that you can see some trends, see what's happening with the numbers, what normal looks like. We've got P&L by ratio. So we essentially, instead of putting numbers in the P&L, we just change them into percentages. So you can see exactly how much you're spending every month on payroll, how much of your turnover goes on payroll costs, how much your turnover goes on marketing costs every month, all of those numbers in there. And then we just have a little summary on some of the expenses, what your top 5, what top 10 expenses are for the month and year to date.
Again, that's all about exception reporting, even within the detail. That's about pulling out the exceptions constantly.
Yep. Then we've got a balance sheet tab, very similar. You've got a snapshot, so key numbers like cash, debtors, creditors, what amounts available to give to dividends. Then we've got the detail balance sheet again, making sure that you've got at least 6 months in there so that you can spot any trends, any numbers moving in a way that you wouldn't expect. And then we have the working capital cycle, which shows you exactly how many days it takes you to generate £1 of cash in your bank.
Yep.
So that would be our balance sheet information. Then we have the cash flow tab, which, we've got a nice fancy graph in there. You can see your bank balance, money in, money out, what we expect that to do over the next 13 weeks.
This is what I call the sleep well at night tab.
Yep. And then we also obviously put our workings in there as well. So you can see what on a detail level, what we're actually predicting is going in and out your bank account, from revenue to different costs, direct debits, things like that. And then finally, we have the taxes tab. This gives you a tax calendar. So we will log the next 12 months worth of tax payments. So every tax, PAYE, corporation tax, VAT, anything that's relevant to you goes in there. So we don't just record things when we've actually done your tax return. We're predicting what we think that next tax return is going to be.
Yeah.
So now, where we are now, you've obviously got 4 VAT quarters in a year. We have predicted what we think every one of those VAT payments is going to be for you.
Wow.
So,
which most people would just love that.
Yeah. So nothing ever comes as a surprise. You've got full visibility of all your cash flow, and that obviously then leads back into the cash flow forecast too.
Amazing.
The thing that never goes in the portal, which underpins all of this, is that in that meeting, we're focusing on action. So off the back of this meeting, who is taking what actions to drive the profit and cash in the business in the right direction? Sometimes those actions sit with the business owner. 9 times out of 10, we both come away with actions.
Yeah.
And that then leads into this ad hoc analysis. So anything that doesn't look right in the numbers, any questions, anything that we think we'd like a deeper dive on, that we take away and we'll then do the rest of the month. And that typically is work that we'll do in Excel.
Brilliant.
So I'll give an example of like a HGV business that we worked with. Their fuel costs have gone up about 50%. And, on the face of it, that looks okay because of what's happened with fuel prices recently with the Iran war. But it just felt a little bit out of kilter based on the sales number. Like we were expecting it to be more like, the sales have gone up the fuel costs have gone up 60%, but we were expecting it to be more like 45%.
Okay.
So we wanted to have a little deep dive on it. We actually wanted to go back and look at like fuel prices per mile driven per truck. So we could see, is there a truck that's out of kilter? Is it maybe that a truck's got old and is now not economical?
Performing well, yeah.
Possibly
stealing fuel.
Somebody stealing fuel.
Siphoning it out.
Exactly.
We had this, like when I used to run a distribution company, I had this same thing where we'd do exactly that in our management accounts, and we would often say, we'd track, and so whenever fuel was going in the wrong direction or something didn't look right, we'd dig into this number right down to a per van, and we'd always find the van, and somebody was stealing fuel. They'd siphon it out the.
Well, look, I don't think that's the case in this scenario. But we did identify some really interesting information about the type of jobs that this customer was actually getting. They, I won't go into this too much, but essentially they have some vehicles that just do really long mileage. They're basically just going up and down the M1 all day long, really, really long mileage. Actually, they're really economical, even though they're quite old trucks.
Yeah.
Versus the trucks that are doing these smaller jobs, nipping in and out of London and things like that. Actually, they're not economical, and that's where the fuel's been eaten.
But what great analysis, because that then informs your decision on what vehicles to buy next time round.
But also, it's more about what customers to target, what work to target, and the pricing.
Yeah, it's incredible.
So hiring out a HGV for the day shouldn't be the same if the job is 400 miles on the M1 versus 50 miles into London, but actually it's quite uneconomical. So anyway, that's just an example of the type of analysis that we would then either come to the meeting with and say, look, we spotted this in your numbers this month. We weren't happy with how your fuel was moving, so we did this additional analysis. Look what we found. Or we would sit in the meeting and say, we're not happy with that number. Can you shed any light? If you can't, we'll go and do some analysis on it.
Wow. Well, if ever anything demonstrates how different something is to a set of annual accounts, it's probably that. And that's why you shouldn't use annual accounts to make decisions in your business, one other thing I'd add to this that I think is really important, that I think people overlook, is the ability for an external party to be able to very quickly and accurately assess your business.
100%.
And the reason I say that is that when I see these reports for businesses, I can see the wood for the trees myself as an external party. I can see this business. I can see how good this business is. I can see that it's in control. There's so many connotations around the fact that if you reach a point where you're trying to get investor funding, bank loans, or let's say you're trying to sell your business, the ability to be able to simply and quickly send over this level of reporting, that they can really quickly understand how good this business is just like gold dust, isn't it? In terms of, compared to wading through spreadsheets where, again, don't forget that if you're now finding it easier to understand your business, so is every external party that may be interested in your business. And that is the gold that people often are missing with this. It's about being, we always talk about this, be exit and sale ready, even if you're not planning on selling, because that just puts your business in a great position for lots of things.
Yeah. Look, and most of the business owners that we work with, they've got like £1 million+ business. So they're in that top like 10% of business owners anyway. So they're quite savvy people, as much as often they come on the phone.
10%? I don't think 10% of businesses in the UK are over £1 million, are they?
I think they might be.
Do you think?
I think they are statistically. Anyway, that's not the point here. They're in the 10%, top 5%, 1%, whatever that number is.
Yeah.
They think that they're not very savvy, but they are, because they've got there. And they actually often know the right thing to do next for the business. Like, they've got ideas in their head and they're not stale. They're not thinking that they've got an amazing business when they haven't, and thinking that they just need to keep it ticking over. They've got these growth plans. They've got these ideas. They're focused on margin. They just need the information to back up their decisions, to say, do you know what, actually, I know that if I move forward with this, it will work or it won't work. And that's what these management accounts unlock for them. So it often isn't this like groundbreaking thing of all of a sudden like your margins go through the roof and things like that, but it's these small incremental wins that overall, you can put 5-10% on your bottom line every year.
Excellent. And you're right, it was 5 to 10%, so we're far off. It's probably a bit less than the 10%, but good stuff. Great, right. That's what great management accounts and great monthly reporting should look like. So please just take something from that, because I think I would be, if I didn't have that now, I'd be salivating for it, because that sounds amazing. I'd want to see my business in that way, please. Let's move on to this week's Profit Cash Growth Extra. So this week, Claire, you're not the only legend in my life, are you? I don't mean it. I'm just trying to make a segue here. What do they? Oh, did I? Yeah, thanks. Ledge.
Oh,
legend,
that's
not
really
genius.
sweet of you. No, we
why
are
am I saying
love
this? All right, calm
Aw.
down. Legends
You made my day.
on Netflix.
Yeah, look at my
Oh, my
grin.
goodness.
I can't get it off my face. One of
We
my
didn't pick it
customers
for that
was a
reason,
legend
but
this
you
week, actually.
did make that point out that there is a bit of a link.
Loving it. Steve Coogan. It's so good, and it's got a little link back to finance and tax, hasn't it? Which is, if you haven't seen it, it's a little bit like Slow Horses, but Steve Coogan is in it, and it is based on a true story, actually, and it goes back to when Margaret Thatcher announced a war on drugs. There was quite a lot of heroin in the UK. People were dying, a lot of use of it, and she announced a war on it without putting any budget behind it. So they recruited a handful of customs officers, tax inspectors, to essentially go undercover and, in the words of Keir Starmer, smash the gangs. But they literally, they were like VAT inspectors, getting in and literally going undercover with some of the biggest criminal gangs in the world.
It's good. Steve Coogan's great as well. I love Steve Coogan. He plays it like serious, but with a bit of comedy in it, and it's
absolutely brilliant,
really watchable. So do check that out. That's Legends on Netflix. And thanks for joining us for another week's podcast. As always, if you'd like to work with Claire and the team, or you'd just like to see what that monthly management report would look like, Claire will just draft you one up, so you can have a look based on your current numbers. And as always, if you could rate, review and subscribe, and just share this with one other business owner that you know. And as always, we'll definitely see you again next week.